Hello guys, welcome to the trading Parrot. Compared to the previous weekend, the price action and the order book is looking very different. I want to discuss about that. I want to show you the liquidation levels and potential technical targets that we can hit to the low end. But careful, because technical targets are being dismissed by price action on the weekends. And this weekend looks very different to the previous one, so make sure that you don't get trapped. We'll look into the Bitcoin status table to show you my sentiment across all the different time frames and time spans. We look into CME gaps, status of each individual time frame, and of course do all the analysis on data-driven trading. Everything that really matters is gonna be covered. And just a heads up, tomorrow is Father's Day, so I'm not fully sure if I'm going to be allowed to put out a video. Best scenario, I'm gonna try to put something from my phone if something really changes. If not, and you're also celebrating your day tomorrow, happy Father's Day, enjoy! Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Someone was asking me, why are you putting outdated information? Because we publish the private TA NQA that we record on the Thursday privately with members of my Patreon, and that goes live for free to everybody on Friday. Of course, on Friday we had a little bit of a shakeout because of the geopolitical situation and the price changed a lot, but all the analysis done in this video is on the weekly time frame. It doesn't get invalidated with a move of the price of less than 5%. Therefore, you can still watch it. It is 1 hour long, but yes, it contains TA on all these different coins. It's got timestamps, so you can jump straight into the coin that you care about. You can find it in my channel under the section live. If you want to be part of that, the link to join is in the description for my Patreon. Alright, something that is calling my attention in here, the altcoins have done really poorly this week. And when looking at the Google Trends, Bitcoin seems to be on the lows of attention at 20, whereas altcoins I'm putting a small high in here at 32. I wonder if that is because people are looking on Google, am I gonna lose everything? Or if they are really interested in researching altcoins at this point in time. With all the fears due to geopolitical tensions, you can see how we close on general markets, all in the red on Friday. Not a deep correction, but we are gonna cover general markets just to see and assess the damage that this could have on the weekly time frame in the upcoming months. If so, don't miss that part that comes at the end of the video. And if this video ends up too long, you can always look into the timestamps as well. So this week we have on Wednesday the Fed interest rate decision, FOMC meeting, and all of that. We got a 99.6% of no change. I'll keep this tab open during the week to see if anything takes a U-turn in terms of expectations. At least we can see that the Federal Reserve in the balance sheet has increased significantly in the past week. It kind of reclaimed the lost support, and we are here around halfway the top of the range in this flag going up. That is positive because it reflects a slightly more aggressive approach from the Federal Reserve, which is typically mimicked right after or by insiders rallying the markets. And we saw a little bit of that in the past weeks. They were investing, and then the Fed, and then everybody else notices that something is going up. But of course now we have geopolitical tensions in the way, and we keep steering the soup over and over again. Just a reminder that the aggregated open interest is about to break down on the daily in here, the support. The price has done it already. We already had in the Bitcoin status the daily in the red for a while. Now it's in neutral, but the aggregated open interest breaking this area that was previously resistance is bringing back that into the previous range. Less open interest reflects less interest from retail speculators into entering positions, which typically leads into a little bit more of correction at the very least. So I'm gonna go very quickly through the Bitcoin status, assuming that this is the first video you watch during the week, or you wanna wrap up of the week, since tomorrow there might not be time to do a full Sunday alpha. Assume this is your Saturday alpha. On the 4 hour, after this lower low, we have this high and we haven't taken the lows. So the structure is still not fully broken, but we have a deeper correction with this move in here that went beyond the 50%, beyond the golden pocket, very close to taking the low. And now that we are printing this bear flag in there, there's the whole decision on whether the bear flag is gonna break down. We're gonna talk about targets if we do so, and partially we are already breaking down. We are right there against resistance. Yesterday we pinched the RSI of 44 at some point and we got rejected. That is reflected with the orange line in the price. You can see we pinched it and came back down. So there hasn't been a 4-hour breakout yet. We are still against resistance over the weekend. And again, we get the breakdown, but that doesn't mean I'm telling you, hey, I'm gonna take a short right here, because on the weekends, we get all of these fake outs with technical targets. In this case, the technical target is 100K. I'm measuring from this rejection of 108 that could lead this to crush the high leverage traders that are located at 100K and at the same time putting a lower low. But I'm also interested in what's gonna happen with the remaining part of this monster fair value gap. If we do go back in time, around here you can see it was formed initially 2.4K is the total size. Then we have this additional fair value gap on the 4-hour, and we took that one and pinched a little bit of the top one, but there is a remaining part that can lead us into 108. 107 is resistance, which is right there in the middle. So we need to acknowledge those two things. After all, around here, we pinch a fair value gap below the resistance of 107, got rejected in an ugly way, and we came for the rest right after. So be mindful of that. Don't assume we take the whole 108 and that's it. We got a 107 resistance in the way. There is no breakout yet, but I am considering to tip my toes below this resistance in accumulation mode for a potential move higher into either 107 and 108. We could see a rejection here at 44 RSI on the 4-hour and potentially getting a higher low, which will be quite bullish. But even if we get a lower low in here, we should be in preparation in this zone for something bullish to happen, despite the fact that that could be just a dead cat bounce. That doesn't matter. We can just take advantage of whatever we get. CPR pivots are being tested. That's true. Let's have a look at how that is going. You can see we test up until the lower pivot at 102.5, and now we are still above the pivots, which is good to see. But if we were to lose 102.6, then we have all the way to 94 to explore the downside. On Friday, we closed CME at around 105.390 on premium, and on Binance, the equivalent is 105. So over the weekend, if we were to come back down, we will create a CME gap. If we start rallying into 108, that's not great, particularly if we are still with geopolitical tensions escalating, with further tweets from Trump and company throwing stones at each other. We couldn't put over the week an all-time high. In fact, we couldn't put a higher high relative to the previous highs. We had an RSI breakdown with a final target that hit. We took the CME gap of 105. Potentially, we are producing a new one around this area again. This one is also gone. I'm gonna write incoming. On the daily, we produce a lower low. We saw that. Higher high is still not yet possible. The bullish cross turned into a bear cross the day after. The breakout of the trading range on the top of the range has been failing, and so far during the weekend is still failing. The breakout daily is at risk, and on the bullish side, on the daily, we have the heaviest pulls, not so close to the price, but still those are the heaviest ones, together with a hash ribbon. And that is kind of the promise at the moment that thanks to this retracement, if things turn over from here after having cleared out over 1 billion of longs out of the way, we can project into that all-time high a lot easier. Of course, we need a bit of bullishness sentiment at the moment. In terms of seasonality, June is not always the best month. You can see the average is in negative, the median is very flat. July tends to erase the losses of June and the summer, but that's just past performance for context. We need to look at the weekly and the monthly in the next charts to update you. So as I was saying in Bitcoin status, we are right there, still not able to escape the 106. We put kind of a bullish candle in here right against that resistance, and today we are in the red, so hopefully by today end we are back above 106. That will be bullish for a move over the weekend that could get into the resistance of 107 and 108. Let's see about that. Ideally on the daily we don't want to go beyond the 44 support, this green line, because that puts on the table going into 25. I'm talking in terms of price, we don't want to go beyond 103. Closing below that, yes, it puts 88, which is that low RSI value, but in the middle you also have the point of control, which could come to save the day, so we don't have to go below 90k. Notice that if we go into 103 and put a close around here, or if we go and we put a low, this is going to definitely look like a double top on the daily, which if it breaks and you go into point of control, then people are gonna start seeing a double top also on the weekly, formed by this high and that high there. So ideally we wanna save the day somewhere in here and start taking the highs to clear out the awkward feeling in the room. Here's the MACD breakdown, and you can see that it's starting to speed up in the momentum on the downside after the bear cross. Ideally, if we go below 103, it's just a pinch and reclaim above 103 very quickly so we can resume into the high levels of RSI. Otherwise, we are still in a channel going into 25. Remember, we had a breakout, and defending 44 is basically defending the breakout retest for continuation. Pinching this is the gray area, closing below green is almost like, we're kind of done here. On the weekly, you can see that we have the opposite candle as the previous week. The previous week was quite a bullish one, we can say in here, saving the day, holding support at 104.4. This week we are still above 104.4, don't get me wrong, but the problem is that we did a full journey of a breakout into 110, and this is now looking a little bit too much as a strong rejection. Of course, it will be a lot worse if we lose support 104.4. That will pretty much settle that move into the bull market support band, which is now sitting at around 96, but of course it could take a little bit more time. Maybe end of June we get there, and we get there when it's already 100k if we get some sideways action. During the week we were about to see a bull cross on the stochastic RSI weekly, but that is now gone. We still have Saturday and Sunday to reproduce it, but you know, it's gone by now. Longs are stepping back from here in leverage squeeze, you can see, but the retracement hasn't been that deep yet. I will have expected a little bit more panic on the streets with what happened yesterday. Some people say that there is a lot of panic, but well, looking at this, we still are at 60 in terms of longs, very far from the bottom of being at 6. And in terms of SOPR, just so we have a look at whether people are taking profits in the green or if they're realizing losses, which are the two extremes. Taking profits can be a top, realizing losses can be a bottom. And you can see that Ethereum, they're taking loads of losses in here after the breakout that couldn't manage to re-enter the previous range. Thanks to this bearish order block, there's a rejection currently. We haven't taken the lows, but you can see people are taking losses like crazy. Whereas with Bitcoin, they're taking profits in here. They bought probably the dip at around 103, and they're taking some profits at the moment. It's not an extreme to say it's a top, it's not an extreme to the downside to say it's a bottom either. We are in the grid at 63, and we still don't get that final sell signal from Cerberus, possibly next week if we continue in this direction, of course. So there is this technical target of 100k, right? So if we extend from 108 to this recent low and the high, and we assume that that was the high, 106, then the extension of 1 leads us straight into 100k. But why am I not so confident that we could see this upside into 107 and 8, or that we're gonna go for 100k? Well, that's because the previous weekend we started Friday from this low, we took that similar liquidity, we created new one slightly lower now. We have a very low volume weekend, and if you've been watching my channel last week, you remember that there was a huge selling wall in here. They started from very low at 105, they moved it to 106. It became magnificent in this area of 107 that is resistance. They entered with shorts until they got completely liquidated, and then we have the liquidations of 1 billion of longs right after. How does it look this weekend? You tell me, where is selling wall? Where is liquidity? It's very, very thin. Look at this 4-hour candle. Up and down, everything is very shallow. No interest in trading. Open interest has pulled out at the moment. Speculators are a little bit burned out after 1 billion in liquidations of longs and shorts up and down. Not our case. We took profits from the shorts in my Patreon, I think just yesterday. I'm still invicta over a year. I should document all my trades as part of the Patreon, actually. Because when I say I haven't taken a loss, they say, no, you must be bullshitting. It's not the case, it's true. Probably the people that don't believe it is because they assume that I'm going all in with a huge amount of leverage, using all my capital every day. It's not the case. I'm not becoming a millionaire overnight, a billionaire overnight, but certainly I'm doing pretty well. And I'm happy to be able to sleep, so it definitely is tuned for my own preferences. So we need to have very clear that the order book is very shallow. There is not a clear exposure of what is their clear intention. And we need to act accordingly. Whatever we do, whatever thesis we have, we need to bet small on that so we can take advantage, take some exposure, but not necessarily get completely burned out if by tomorrow geopolitical tensions go completely nuts. I think thinking long around 100K, it's a good idea, of course, subject to the size of your position and your plan for your own risk management. At the moment, there is nothing here. The bid versus ask is flat. We got a bunch of things that are bullish. For example, still a big amount of liquidations to the upside that is overlapping with that fair value gap, still very fat too. We are in a weekend, we could produce a CME gap going lower. Yes, I see the breakdown of the bear flag, but I want some exposure on a long starting from very close to here, and I'm already thinking my levels in case we put a new low. Levels of interest, if we go really bullish, we have that 111 that is very heavy, closer to the all-time high. We need the right conditions to get there, but we could start preparing something, right? At 102.7 there is a big liquidation too, very close to the price. 102.7 is roughly around the beginning of this move up, probably overlaps with this blue area, but actually the target of the bear flag breaking down goes into 100K. So one option is to start building a position around here and scaling up on the liquidation level slightly below 100K, because even if you don't end up going that high, you can still exit with a break even or something to manage the risk in case they ring the bells and something goes bad, the shit hits the fan, whatever. I'm also looking into the size of the liquidations, right? So we have on the 5th of June, 800K longs liquidated. Then we have in total on this 24-hour block over 1 billion. And I don't see in the past month anything that big with the shorts. Of course, some structure got broken on the bullish end, but don't worry, shorts are gonna get smashed. And that is despite if we go to a new all-time high. And that means that building a position on some dips is good in a small size. Let's have a look at the general markets. And well, dollar still is at 30 RSI, higher than 28, 29. So we don't have yet a lower low after the breakout, invalidating absolutely this. Instead, we could potentially, and I'm assuming something that is not necessarily truth, but if we were able to bounce from here, we will get a lower low on the price and a higher low on the RSI. So that could be a bullish indication for my thesis that the dollar is looking for new highs and building a bottom formation. If I'm completely wrong on this, I'm gonna put the patch before I get the wound. That's how we say it in Spanish. Write down in the comment if you know what I mean. There is this pattern that I've been using very quietly. Remember when we short dollar at 110, we were speculating that we were gonna have a reversal because we connected this line to 1985 and it gave us perfectly 110. So if we do the equivalent thing here on the support, and my primary thesis is broken, that we are going to have a bounce back into the 21 weekly at around 102 or possibly 104 as well, then we could be heading into 96, which is quite a strong support from 2011. Gold is definitely breaking out with this weekly candle close. You can see in here is quite a magnificent move up forming a double bottom in here, and the target is to go into RSI of 77. So let's look for that. That is at the moment 3,714. So if you've been accumulating within the bull flag and you're now in the cash and you're trailing or managing your position, assuming you're a swing trader, it wouldn't be unrealistic to get there. That is just an initial target. Of course, if we do the full revenge rally, that can bring us into 84.56. And that's probably a crazy target that no one is gonna believe, but that is 4.281. Gold is considered a safer haven than other assets, and all this escalation in geopolitical tensions definitely make the investors bullish on gold again. Volatility has almost 99% formed the double bottom right there at support on the weekly RSI, and that is threatening to have the expansion that we constantly repeat like a parrot every week in this channel. If that plays out, of course, that must damage general markets because they are opposite. The volatility is applied to S&P 500, so if volatility spikes, the expected outcome is that S&P rejects the resistance on the weekly and starts forming a low from here. And you tell me, but what do you see when you form a low from this area? You form a double top. So that is not what we want to be seeing, particularly if we lose the 21 weekly, currently located at 575. Notice that if we go to S&P in other symbols, it is still in the breakout, but very shallow. I want to say that. On Nasdaq is the same thing. We are seeing a rejection right there. I will say that step by step, we are increasing the chances of the bearish case, but we are still right there in the resistance. What I mean by that is that here you need to pick a side because we haven't fully invalidated the breakout bullish either. It's just that it's reducing the chances with this weak development. Guys, would you like to trade $500 for free with a position airdrop and get to keep the profits from that? You can use my Bybit link in the description. Click on that and then click register to claim. After that, you're gonna be offered a list of different altcoins and Bitcoin that you can trade with leverage, longs and shorts. All of that for free. This campaign ends in 2 weeks. If you want to stay non-KYC, not having to go through the hassle, you can open an account with my link for bluffing. That's also in the description. That gives you 10% cashback, 3,000 in futures bonus. Of course, all of this is depending on the deposit size and the trading volume, but you can win up to a Model 3 Tesla. Since tomorrow is Father's Day, I'm gonna be sharing a code in the description to get 50% off of all my Patreon shop, so you can take advantage and spoil yourself with some pro indicators that I use on all these videos, or with access to the Telegram charts. If you want to have a look at them for free, go to my Telegram channel, the link is in the description, and on any post click on TTP charts. That's gonna give you access to all the indicators, but if you want to unlock them so you can use them as much as you want, you can click on any of them and get 3, 6 or 12 months. That really supports the channel and helps me to pay my team, edit my videos, and overall is a win-win for everybody. Thanks so much. I'll see you on the next one. Bye-bye. If you're still here, I will give you the wrap-up that I'm thinking of doing. I am thinking to enter a position around this area of 104, slightly lower. Small size, and I'm definitely considering scaling up in the vicinity of 100K. In terms of shorts, I would like to see how we land in this area around here if we go into 107 or into 108. I am not interested in shorting this bear flag because it's too obvious. It's almost like I smell retail trap over the weekend. But of course, that can be wrong as well. Now, go enjoy your weekend. Bye-bye.